everyone, welcome back to Corporate Decoder, the place where we decode the jargon and sniff out the scandals. Today we're looking at Innovative Eyewear Inc. They filed a report about some stock activity, and let's just say it's not exactly a blockbuster earnings announcement, more like a quiet adjustment. So what's the big news from Innovative Eyewear, or as they're known by their ticker symbol Y, on August 15th, 2025? Well, they've made a move to increase the number of shares they can sell. Think of it like a company deciding they might want to sell more of their t-shirts, so they print a bigger batch. This involves their common stock, which is priced at a tiny fraction of a cent per share. This is a normal thing for companies to do, establishing a framework to potentially sell more stock down the line if they need to raise more money. They filed a prospectus supplement to this at-the-market offering agreement they have with H.C. Wainwright & Co., which was originally set up back in April of 2024. This means they have a plan in place with a financial institution to sell their stock, and now they're adjusting the total number of shares they're allowed to sell under that agreement. It's also worth noting they have another type of security out there called warrants. These are like options that give people the right to buy the company's stock at a certain price in the future. Their symbol for these is Luhi Double. This filing doesn't directly change those warrants, but it's part of the overall picture of how the company manages its stock and potential future sales. Now, a key detail here is that Innovative Eyewear is still considered an emerging growth company. This means they're relatively new and get to follow some less strict rules compared to older, bigger companies. They've also opted out of longer transition periods for new accounting rules, which shows they're aiming to keep their financial reporting up to date. So to break down what this means in plain English, Innovative Eyewear, the same company behind those cool smart glasses that adapt to light, wants to have the flexibility to sell more of its own stock. They already had an agreement to sell shares through a firm called H.C. Wainwright & Co., and now they're just bumping up the total amount they can sell. This is a common way for companies to raise capital, essentially selling a piece of ownership to investors. It's like saying, we might want to sell a few more slices of the pie later, so let's make sure we have enough pie ready. And to make sure everything is above board, they've got legal opinions from a law firm called Elinoff, Grossman & Sol LP. These opinions basically say that the way they're planning to issue and sell these extra shares is all legal and proper. It's like getting a lawyer to double check all the paperwork before a big transaction. So what we're really seeing here is a procedural move. It's not announcing a new product or a massive success or a huge loss. It's about setting up the financial plumbing for potential future needs. Companies do this to have cash ready in case an opportunity pops up, or if they need funds for expansion or operations. It's about flexibility. Now let's put on our Warren Buffett hat for a moment. This isn't a report filled with profit and loss statements, but the underlying action tells us something about the company's thinking. By increasing the number of shares they can sell, they're signaling that they anticipate needing to raise more money in the future. This could be a sign of confidence in their growth prospects, believing they can sell more stock at a good price. Or it could be a sign that they foresee a need for more cash to fund operations or product development. Without the actual financials from a 10Q or 10K, it's a bit like seeing someone fill up their gas tank. You know, they plan on driving somewhere, but you don't know the destination. The fact that they're an emerging growth company still means they're in a growth phase. Their address is in Florida, and their main trading happens on the NASDAQ, which is a big exchange. Their stock symbol, LUSWI, is memorable, and their warrants, LOCWIDouble, are also listed. However, one key thing to remember with at-the-market offerings is that they can be a double-edged sword. While they provide flexibility, they can also dilute existing shareholders' ownership. If the company sells a lot more shares, each existing share represents a smaller piece of the company. This can lower earnings per share and potentially impact the stock price if not managed carefully, or if the funds raised aren't used effectively to grow the business. So what's the story here? Innovative Eyewear is shoring up its ability to access capital. They are preparing for future financial needs by making it easier to sell more stock. It's a proactive step in managing their finances. The key will be watching how they use these funds. If they invest wisely in innovation, marketing, or expanding their reach, this move could be a precursor to significant growth. If the money goes towards just keeping the lights on without a clear growth strategy, it could be a sign of underlying financial pressure. For us decoding the corporate world, this filing is more about the company's financial strategy and future potential than about current performance. it's a signal that they want options, and that implies they see a need for those options in the near future. Alright, that's our quick decode of Innovative Eyewear's recent filing. What's your take on this move to potentially sell more stock? Do you see it as a smart financial play or a potential red flag? Let us know in the comments below. If you found this breakdown helpful, give us a thumbs up, and don't forget to subscribe for more corporate insights, and join our Discord community linked in the description for even more discussions. Thanks for watching, and we'll leave linked in the description for even more discussions. Thanks for watching, and we'll see you in the next decode.